Hey everyone, welcome to the live stream. Be the boss of your money. Darn it, just almost 5:20 p.m. on Wednesday already. Yeah, I really would like to get these done at 4:30, but it is what it is. Stuff comes up throughout the day. I'm sure you understand. The important thing is we get the message out, get the information out that you need. There are a couple of exchange traded funds you may have heard about that track wheat, corn, soy. It's important to understand what these are. I could see these becoming very popular. I could see these becoming strong. I could see strong demand for these ETFs as the price of agricultural commodities rises because of what's happening in Russia and Ukraine. So I'll talk about that in a moment. This is really a perfect example of how geopolitics can merge with the economy and the stock market. So we'll talk about that in a moment. Let me just run a quick intro here and we'll go over the day's action. And I want to just take a quick look at the yield curve with you as well. Here we go. All right, thanks so much for joining me. I'm Mitch Goldberg. We're just getting started. You're watching my live stream, Be the Boss of Your Money. I hope wherever you are able to find some relief from the heat. It seems nobody in the United States can really escape it. Although the weather is a little bit cooler today, we had massive rain, but now it's just a comfortable low 80s degree day and sun is out and we could use it. Boy, we had so much rain the last couple of days. It's a shame we can't just send the rain to Texas or someplace that could really use it, but that's the way it goes. So hope you're staying cool. Let me talk to you real quick about these exchange traded funds. I feel like this is a PSA, okay, public service announcement. What you should know when you buy certain kinds of funds, in particular exchange traded funds. First, a brief background. One of the great things about the stock market that has really changed the game for investors since I started in the industry, which is now running about 34 years, is the ability to buy anything, anytime, anywhere. You want to invest in stocks of China, it's easy to do. But years ago, that was very difficult. You needed a lot of money. You paid exorbitant fees and commissions to do it. And you had to work with a firm that had the heft to have an international desk so that you could actually buy Chinese stocks, for example. Today, you could buy Mexican stocks, Turkish stocks. You could buy, there's well over 100 ETFs that follow 100 plus different countries, stock markets. So it's you could buy anything. You could buy gold. You could buy silver. There's so many things that you could buy today that track commodities, in particular soft commodities. I'm talking agricultural, wheat, corn. This is a very big deal. I can very easily make the case for higher commodities prices. Now, commodities prices backed off from the peak of over a year ago when we had much higher inflation, but they have gone up a lot from their recent lows. The reason for that is because Ukraine and Russia. Ukraine was able to export not the amount of wheat it used to export before Russia invaded it, but it's still, at least in the last year or so, it's still able to export a lot of what it produces. And the world lives on wheat and corn. Wheat is a great crop because it's easy. It's easier to grow. You don't need the best conditions, environment, soil, weather to grow wheat. You do need a boatload of, almost with the F word, you need a boatload of fertilizer, though, to grow it in a lot of regions that don't have the same kind of soil that we have here in North America. So, having said that, the deal with Russia, Ukraine, and Turkey to allow Ukraine to export wheat via waterway has expired. Russia's not renewing it, and now they view any ship leaving a waterway of a Ukrainian port as a military target. So no one's going in to pick up the wheat because they don't want to get blown up. It's not safe. Nobody is able to leave with wheat. The last ship, I think, left, I think it left yesterday or the day before. Having said that, this could be a major problem for the global population. The global population was able to grow because we're able to get better at farming and feed more people, and populations would grow. We're taking that away. Similar situation with corn, although not as big as wheat in Ukraine and Russia, but it is a very big crop there too. And Russia's farming is down quite a bit as well. So having said that, there is a very bullish case for the price of wheat and other commodities, fruit, agriculture commodities, to go higher. Okay. If we eat less wheat, we're going to eat more corn and other products. So we have to eat something, right? So the case is there for rising food prices, but it's really hard to game this as an investor. And I know it might not sound so wonderful to talk about gaming this to make money from commodities off of what could be suffering of hundreds of millions, if not billions of people around the world. So this is a very sad, tragic situation. But nevertheless, wheat is expected to go up. It's gone up a lot from its recent low. It's expected to go higher. Now, we maybe could make up the difference in North America. Maybe we'll have another farming revolution. Maybe we'll just be able to produce more crop than we could because of new inventions. We shall see, but I can't really count on that happening over the next couple of years. Neither can you. So there are exchange traded funds. Remember, I talked about exchange traded funds. You could go anywhere, anytime, buy anything, anywhere, anytime. You want to buy Mexican stocks, you want to buy Filipino stocks, you can do it. You want to buy any kind of commodity, there is an ETF for that. But the ETFs for the commodities, for the food, for the crops, the staple crops, these are based on futures, because when you buy and sell wheat on the exchanges, you're not really taking possession of the crop. What you're doing is you're buying and selling futures. Now, the futures are somewhere. They're, for what you call it, they're at places that store the wheat. Okay. But the point is, these ETFs, they're not like buying stocks, you hold on to them. Futures, okay, on wheat and sugar and corn, they expire. So when you buy and sell these ETFs, especially when you buy them, I'm more concerned about you buying them than selling them right now, is that they're not meant to be long-term holds, because futures inherently lose value because they expire. So if wheat is not going up, the price, if the spot price of wheat, the price we pay at the moment to buy a bushel of wheat on the commodities exchanges, if that's not going up a good amount, then the price of the futures is deteriorating because they have time limits. They expire in a short amount of time usually. That's the ones that these ETFs are using, short-term futures markets, to try to capture the daily price of wheat. But if wheat's not moving, or not moving enough to compensate for the time decay of the futures, you're losing money. And these are not meant to say, I'm going to buy wheat, this wheat ETF now, for example, and I'm going to hold on to it for the next 6 to 12 months, maybe 2 years, because I expect food prices to go up. I expect a lot of global food insecurity. That's not what these are for. These are for to take short-term bets, get in, get out, to trade the price of wheat using an exchange-traded fund. So you don't have to go to a commodities broker. And someone like me can trade these for my clients easily without opening up a commodities account. You could buy and sell these on your own. I don't think, well, these are, I think, are good for short-term traders, but by and large, most of us, these are not good for, by and large, for most of us, these are not going to be good holdings. They're not meant to be buy and holds. They're meant for buy and sell quickly. They're trading vehicles, not really investment vehicles. And I'm going to just show you a quick screen share. Hold on, hold on. Okay, I'll put myself up here. And I'm going to just show you this particular company that's getting a lot of popularity. I think it's spelled Tucrium. And let me make the screen a little bigger so that you could see this. Okay. They have ETFs, they're ETF solutions, as they're calling them. Okay. They're ETF solutions. And what they have are corn. Well, I just had the list up a second ago. Okay. But that's what happens when you hit a little something with the mouse and they go away. But they have for corn, they have for wheat, soybeans, cane, sugar. I'm not sure what some of these others are, but I'm really interested in corn and wheat right now. So you're going to start hearing a lot more about this. They've been featured on CNBC and some of the other major outlets. And I just want to reiterate that the point of these, let me make this a little bit small. I'm trying to fit a lot into a screen. All right. The risks of these, I don't think are being told the way they should, because when I watch the people talk about these, they're not coming out and saying these are not for long-term investors. These are basically packages of futures contracts that are focused in one particular commodity. Okay. And definitions, ethics, but there's nothing here that's showing me the risk is like buried. They give you a fact sheet, they give you the reason to own wheat, opportunities in agriculture. But what they're not telling you is, from what I can see here, is the particular risk that we're talking about. So it's just a buyer beware. And I'm pounding this to death over 10 minutes now because I know somebody's going to see this. They're going to see it touted in some TV show or something about financial markets. You're going to hear about wheat going up, I think, a lot more. You're going to start to see the price of bread, for example, going up in the United States. The whole world is going to be paying more for food because of what's happening with Russia and Ukraine. And people are going to try to find a way to invest in this, and you're going to hear about these ETFs. These might not be, in my opinion, they might not be the best way to do it unless you're literally looking to just maybe buy them one day, sell them the next day, or buy in the morning, sell in the afternoon. That's what these are really for. I'm looking at companies like, I'm looking at Mosaic, a fertilizer company, which had a pretty good day yesterday, but still way off its high. It's still about half, almost it's down about a third of it from its high. I'm looking at Conagra Foods. I'm looking at a lot of stocks to try to see if there's a way to make a buck from this. The problem is when you look at food stocks, food companies could raise their prices. Of course, when you raise your prices, you sell less stuff. And people will always migrate to the cheaper stuff, the cheaper discount products, in-store brands. So as Conagra, for example, but for them, if their input costs go up, and that goes for any food company, that's probably going to hurt the company, not help the company as far as their corporate performance go. As far as fertilizer goes, if there are fewer places to grow and export agriculture commodities, then there's probably going to be less of a need for fertilizer, not more. Plus, Russia is the biggest exporter in the world of potash, which is a key ingredient for fertilizer. And if they're having trouble getting their fertilizer out because of export controls and trade sanctions and all that, that's not going to be good for the existing fertilizer companies because they have to pay more for their input costs. So this is a very tough place to make money. And I just want to warn all of you that you're going to be hearing, in my opinion, a lot about trying to make money in corn and wheat. And I think it's going to be, for the most part, a lot of talk a lot of inflation for food, but I don't think it's going to be possible to really invest on a theme like that, because you have to figure out who's paying more for input costs. So who's going to get squeezed in their margins, who's going to get hurt because of export controls or the inability to distribute product. And we're going to find this out, but it's going to be very tough. I think ultimately there are losers and not winners. So that's my story. I'm sticking to it. What else? The Dow is up today for the 8th day in a row. This hasn't happened in like 4 years, since 2019. So the Dow is maybe 3%, 2% away from reaching a new all-time high. Funny thing is, we went into the Dow pretty specifically yesterday, into its components and why I like to follow that particular index when a lot of people don't. People think it's too small of an index with only 30 stocks. Why should you follow that when you can follow the S&P 500? We got into that, so check out yesterday's episode. That's about it for the day. So just a warning, I'm going to be looking at some of the other ETFs that they're coming now with guarantees against loss. But I think it's up to me to poke holes in a really good sales story, so that you don't buy something and look back in 3 or 4 years and say, I didn't get what I was promised. Well, that's what happens when you are a sucker for a good sales story. You often don't get what you were promised. So we'll talk about that tomorrow. Have a great day. Thanks for sticking with me. Peace out.